To finance now, and a crucial week ahead for households and investors, with the Reserve Bank tipped to lift interest rates once again this Tuesday. Joining me is Chief Investment Officer at Motley, Scott Phillips. Evening, Scott. We know to expect another hike, but by how much, given the latest inflation data and, of course, the federal budget?
Peter, good evening. This is the $64 question, or of course it's much more expensive for the average mortgage payer who's going to be looking at something more to be paid on the mortgages from this Tuesday. No one knows for sure what the RBA will do and what it should do are always two separate questions. There is a very strong case, unfortunately, for a 0.5% interest rate increase. Whether they do that, given they went down from 0.5% to a quarter only earlier this month, they may choose to save face or not want to be seen as flip-flopping or maybe putting some panic into the markets. But those inflation numbers were staggering. No surprise for anyone filling up at the tank, at the pump or paying at the cash register, but a very, very tough time for households. The RBA probably should go 0.5%, unfortunately. Whether they will, we'll find out on Melbourne Cup Day.
Tough time for households indeed. We heard earlier in the bulletin the government's biggest task in battling the cost of living is to lower power prices, meaning it will have to intervene potentially in the energy market. That's what the government's flagging, which is somewhat unprecedented for Australia. What tools do you think they'll have to achieve this, to bring power prices down?
Yeah, it's a really good question, mate. And as you say, this is the biggest challenge facing the government. Not only are prices sky high, of course, but in the budget papers themselves, Treasury estimates energy prices will increase 56% over the next 2 years, an extraordinary increase for people already doing it tough. There's a range of things they could do, anything from taxing the big providers, the big suppliers, through to putting a cap on energy. Most likely, I think, is they'll probably get those gas producers in particular to divert more supply into the Australian market. What that does, obviously more supply and the same amount of demand, high school economics says that should push prices down. The government desperately hoping that's the case. Of course, in the UK, we saw Liz Truss, the former UK Prime Minister, try to intervene with the energy cap, which was not only extraordinarily expensive, but rattled financial markets. I imagine the government will stay away from that, although they may well come back to it. They'll probably try a market solution up front. They are tasking the ACCC with a more interventionist role in the energy market, and we'll see what that brings as well.
OK, quickly, on Wednesday we'll see building and home lending figures from the ABS. Are we likely to see them drop, Scott?
Yeah, we are, on both measures. This is, again, the challenge with housing more broadly. Are we going to build more? Are we going to buy more? Probably no in both cases. The average lending capacity of the average borrower simply is going down as rates go up. So those numbers probably both negative. OK, and how are we looking for our market when it opens tomorrow? Bit of good news to finish with after what's been a tough last week or so in the financial markets and in the economy. At the moment, it looks like a gain of about 1.4% if those futures hold until the morning. So hopefully at least a good start for the ASX.
Scott Phillips, Chief Investment Officer at Motley. As always, thank you for joining us on The Late News.
Great to be with you. Thanks, Peter.